Matt Orton of Raymond James Investment Management, who's joining us on the show right now. Matt, thanks for taking the time out and speaking to us here on NDTV Profit. Perhaps my questions are more or less similar in this case, Matt. Firstly, want to understand what you made of the Federal Reserve's chairman's commentary coming in over the weekend, and what sort of an implication could it potentially have when it comes to their rate decision on the September 18th? What's the way forward? How are you assessing this at the moment?
Good morning. And I think it was very constructive what we heard from Powell. I agree with what was said that the stage has definitely been set. I think this was the clearest signal yet that we've received from Powell that rate cuts are going to start in September. And really the question that remains is how fast and how deep are those cuts really going to be? Powell's the master at leaving optionality open. And I think he did just that, using Jackson Hole to not commit to 25 basis points at every meeting or the need for a 50 basis point cut. He left it data dependent. And when I look at the totality of data that we have, I've been very constructive on the U.S. economy, and I remain constructive. I think there is some cooling that we're seeing with respect to the economy. There are some cracks that we're starting to see with respect to the labor market, but none of those say immediate recession. None of them say that we're going to see the labor market fall out from under us. When you have corporate profit margins standing where they do today, which is the highest they've been since 2021, none of that signals that we're going to have mass layoffs. So I think the market is a little bit offsides in pricing in 100 basis points of cuts before the end of 2024. So there might be some indigestion. We're going to get the jobs and payrolls report next week. So I think that's going to be the next big catalyst and data point that might inject some volatility into this market. But I remain constructive, and I've been telling clients that if we do have volatility related to any rate pricing or concerns around the economy, I would be using that opportunistically in portfolios to continue adding to positioning.